Good morning, good morning, good morning, everybody. It is Taco Tuesday. I am wishing you the happiest of happy Taco Tuesdays. June 27th here, coming on to 6 a.m. on the East Coast. And I'm going to have my coffee while I'm doing this with you because there's a little bit to cover. It's a little bit mixed up because there's different things that need to be pointed out. But I also want to give a little bit of time for the LeBron James family to greet everybody at the end of the video. So, where we're at yesterday, again, pathetic. 5 days in a row now. Tuesday last week, because we had the holiday on Monday. 34 points yesterday, 25, 30, 26, 33. That's the last 5 days. The average true range for the last 5 days is now below 30. I don't recall ever having seen it drop below 30. Oh, yeah, sorry, here, April 20th. April 24th, April 21, we dropped below 30. So, yeah, the range has gone to complete shit, but the trades are still there. You guys happily had an opportunity to get 100, 200% on either SPX, SPY, or QQQ puts, together with that elongate idea of the spread, which I'll give you a little bit of coverage on as we go over on this. Credit spreads worked out as well, although only a little bit better than 40%, but the trades are there. So, anyway, what we've got going on here, we are now greater than minus 10% from the all time highs because we closed below that 43.37. We finally did break that. Not really much over here on data to be looking at other than this 43.2882 that we broke down to, the 43.28. There's nothing underneath us except that 4304, 4305. So keeping that into consideration as we move. Um, just going over a summary here in the beginning, and then we'll try and get into a little bit more detail. Again, yesterday, 4370, 4365s, 43%. Again, 21 sessions complete without a minus 1% decline visit. Today, minus 1% is 42.8553. Very significant number, and something that I'll continue to point out to you as we go on here. Because again, SPY 427, it's pretty significant when you look at it. But again, remember, we're talking about a trend break. Covered with you what the other trends were, how long they ran. So this is a trend break, and the closer we get, the more days that we get involved, 21, 22, 23, 24, the higher and higher and higher the odds begin to increase. And right now we have a very nice setup for this situation that we've got right here. QQQ broke out of the 360s, closed out of the 360s, broke that 360.50, went right down to that 357 area that we were looking for. On the close, we are now a 4% drop on the QQQ. So again, for today, you're looking at 354 for minus 1%, which it would need to happen if we are going to get SPX minus 1%. More importantly, you would need to get a minus 2% day, and you're talking about 350. So 350, 354 in between the two, that's your 23.6 retracement back to the March lows. So again, a lot of significance that's involved with this, and a lot of projected target areas to continue to look forward to as we are into this. So come off from here and we'll go on to the charts quickly. I bring you back again to the S&P futures chart and the big gap up from when they rolled over the contract. Typically, these rollover contracts tend to fill that gap the very same week after the roll up occurred. Obviously, we haven't. This now we're at 43.7750 in real time. This gap fills at 43.0475. So you do the math, right? 4377.5 minus 4304.5, and you're looking at about a 73 point downside. So take yourself over onto the SPX, 43.28 minus 70 points. You do the math, you're getting down there to around that 42.50 area. What I'm looking at here, I'm showing you a wider zoom, a wider version of the SPX as to what's been going on and what's occurred here. This is our March low, the 38.08, and these are all of our moves, and just counting from percentage point of view, that's it. And what you see here, we are 2.7%, almost 3% to the downside. This is our largest move to the downside since we came down to that 40.48 back in May. This is the largest move down that we have had in close to 6 weeks. So there's a lot of benefit from this, but at the same time, a novice trader wouldn't really actually, and they wouldn't embrace this because they want it to just basically make their trade green. They want their trade to be green, and due to the delay that we've had over the last 30 days, it has become a bit of a headache, which I wouldn't disagree with anybody. This is the stall area I was mentioning there in the chat room yesterday, that if we do get a dip below 43.37, we're going to have a stall at that 43.15, 43.12, and that was because you've got your psychological calculation, which algorithms do math, minus 3% at 43.15, and you got your 20-day moving average. Obviously, the 20-day moving average is going to try and do everything that it can in its power in order to hold and support. Should it fail, then you're obviously coming right back here to our old highs, which is right below 4,300, which is right where your 43.04 is, which then opens up your minus 5% level, which is at 42.26, which is inside of the gap that needs to still be filled from back at the very beginning of the month, June the 1st. So still have a couple of days, still have some big opportunities, especially with Jerome Powell speaking tomorrow. But we'll keep this, as we go minute by minute, one by one, because on your VIX, again, we still have that gap over on the VIX that hasn't been filled from the weekend, but we're still not getting that VIX up and bullish and strong and Viagra'd, all, plus 1451. It's still a little bit limp. And, limp just doesn't perform that well. So that's why I got a lot of tongue lashing going on about what's this, what's that, what's going on. And I'll pull you off the ES and bring you onto the QQQ. The QQQ, this is what we've gotten so far. Again, with that 4% drop, we broke that 360.50 and we did come down to the 20-day moving average. So very clearly, we'd be looking at that 354 area with 352 sitting down below it, 351, and very obviously that 347 coming back here to the second week of June. So opportunity is there, but again, we got a nice move already yesterday with what happened there with NVIDIA. You almost thought they were going to halt trading. NVIDIA almost down 10% from the highs that they put on last week. Tesla had the same thing. Tesla's yesterday was just unbelievable when it started to break down. And there's a lot of bulls out there that are now over onto the other side because they see, here you are with new month lows over here on Google. Zoom out on Google a little bit wider, and you can see where Google's at a breaking point. And this is your AI earnings back over here, which they're going to replace come, next year or next quarter with BJ. And Apple, nothing, absolutely nothing, nothing whatsoever out of Apple, not even a fraction of a concern out of Apple, Apple being your number one top weight out there. So Microsoft already got a decent move to the downside, down nearly 20 points, 25 points, but still it's not in conjunction together with Apple and some of your other individual names. So there's a lot of opportunity for it to happen, but there it's the same time is a lot of let me just slowly step into this and step into this. So first and foremost, going over the let me pull that out. The 4 hour index, which I shared yesterday in that email midday, a lot of worry because these have gotten oversold. They have undoubtedly entered into extreme warning levels of oversold. Not extreme oversold, but extreme warning levels. SPX, NDX. Dow, not so much. So I'll bring you here first and then move on to that. So for the credit spreads, talking on the SPX and the 0 DTE, this continues to be the bread and butter, the 4370, 4365. And someone asked yesterday what I meant, which again, I apologize. My English is not as great as my American is. Remove your studies. And here we'll go on a 10-day. What I was talking about was getting in to one of these spread trades. Yeah, I'll go here. Trying to get into it in this area. Something near 4360 or even above 4360, like we visited yesterday, right there, that quick little visit above 4360, something up in this area here in order to get into these. Buying the 4370 calls and selling the 4365s. Yesterday, almost $2. Almost got a $2 credit on them. But again, it brings you back to where you have to look at this from a numbers point of view where your 5 day range is 30 points. You're trading in a 30-point range. And this is how we always got fucked going back for weeks and weeks and weeks. We would trade 35, 28, 29, 38, 34, and then all of a sudden a 55-point range day comes out to the downside, but still. And back into the trend, 23, 30, 30, bang, here comes a 50. Again, same thing that we were doing for the earlier part of the month. You know, 38, 29, and then a 60 out of nowhere. Another 49 come out behind that. So you got to be really cautious and careful about your exposure, which is why, again, I still think that this idea that Elon came up with is pretty fucking good. Here's a very, very, very cheap way to expose yourself to the plausibility of getting a minus 1% day. You're buying the 4,300 puts for today, and you're selling the 4,285 puts. This closes below 4,285. This is worth $15. Cost you 50 cents. So you're looking at $50 exposure for a possible $1,450 return should we get that minus 1%. Not only visit, but close below that minus 1%. A little bit of a different version, not necessarily needing to get all the way down there, but at the same time, looking at it from a kind of more realistic point of view. You buy the 4315 puts, sell the 4295 puts, cost you $1.60 as of now, 6 o'clock in the morning. $1.60 exposure, 20-point spread. So you're looking at a possible $18.40 for your profit on this. 160 out there, $1,840 possible if we do get a breakdown below 42.95. So there's a lot of different ways out there to really minimize your risk in order to take advantage of what we actually have in front of us, while at the same time not needing to, go out there and bite your fingernails trying to worry whether or not your 18, 20 contract credit spread that you're going to make $300 off of because we've got no range and no VIX. I like the idea I think it works. And the LeBron James family wants to say good morning to you. So I'll see you guys in the chat room. Here we go. 'Cause it's Taco Tuesday.